Hi guys, so in this video what I'm going to do is going to go through income protection and explain a little bit about what it is, what it does, and possibly why you should have it. So let's get into it. What is the most valuable asset you own? Let me show you. So, people place value typically on objects. Mobile phone. People place value on that, it never leaves the side. People place value on pets, dog, cat, animals. They also place value on bigger items, car. And then I suppose the next in line would be house. So if we were to put a value on these items, as in a monetary value, then what mobile phone is probably like £1,000. People would say a dog is or a cat is priceless, but that's an emotional attachment. But actual, in terms of a number, I suppose you can spend £500,000 for a dog. Sorry about that. That was my phone. So dog, vet bills can be expensive, so let's say 2,000. Car, go conservative. Obviously, you can have double that, or you can have a tenth of that. Let's put 20,000 down, and just because we're using nice, simple numbers, missed the zero out of there. That's what I wanted to do. 200,000. Let's at least make it right. Okay, and I know you get more houses more expensive than that, and that's fine. Okay, so most valuable asset isn't actually on the screen, because the most valuable asset would be you. Let me explain. So, let's say you are age 25, and you earn a salary of 30,000 a year. You have got roughly 40 years worth of work left in you, possibly more, but let's take it 65 because it's a right round number, which means that your value is £1.2 million over the next 40 years. What is interesting is this is the single most underinsured asset in the world. Are you insane? Now, how much does it actually cost to insure these items? So, again, this can vary quite dramatically, but let's just look at some ballpark figures. Mobile phone, generally £10 a month, something along those lines. Insure your pet. Now this can vary, and I've seen clients over the years where this has varied massively. This can be as low as £10 a month, or it can be as high as 80, sometimes 90 I've seen. I've come across that a month. Car, generally obviously it gets cheaper the older you get and less accidents you have and all that kind of stuff. But again, if I was to kind of collate the information that I've got from seeing clients over the years, I would say this is roughly somewhere between 30 and £100 a month. £100 a month is usually the younger ones. Home insurance, again, around about £30 to £50 a month for that. People will quite happily pay these to insure all of these items. However, this one is a much more difficult one concept to get your head around, because people do not insure themselves, even though it can be cheaper depending on what you're covering. And I'll go onto that in a further video. But this can be as low as £6 a month, possibly, depending. There's many factors. One thing I will say, the younger you are when you insure yourself, the cheaper it is. You will always be more expensive further into the future because you are getting older. That's how life insurance and critical illness insurance and that kind of thing works on age and medical conditions. Unfortunately, the older you are, the more likely you are to have complications such as medical conditions that increase the cost. Trick is, get in well early when you're young and you're healthy and there's nothing wrong with you, you're not overweight and you haven't got any inherited diseases. Top tip.
But wait! There's
So the first thing I'm going to say about income protection is that I don't actually like that term for two reasons. One is that the main reason is that nobody really understands what it is. And the second reason is that it's kind of not misleading, but there is an easy way of explaining it that actually makes more sense to the vast majority of people. So I prefer to call it, and let me just get rid of that. Private sick pay, because effectively that's what it is. What you're doing is you're taking a policy that will replace your pay, your income. The question is, why would you want to do that? Okay, so let me illustrate what I mean. So this is your house, and over here on the left we have your income. There it is. Let's see. Okay, now that might be one salary, or it might be two, depending on your family dynamic. The house here represents your home and your household and the people within it. So into the household comes your salary, and then it goes. That allows you to pay all your bills, pay your mortgage, and have the lifestyle that you want. So now let's look at what goes out. So here are the things that are going out on the right hand side. So you've got your mortgage, that payment, your utility bills, gas, electric, water, etc. And then you've got the other utilities that are, I suppose, optional. So you've got TV, internet, mobile phones. Then you've got car, costs, maintenance, that kind of thing. You've got loans and credit cards that may or may not be linked to the car. So you may have took a loan for the car. But there could be personal loans, credit cards, obviously petrol or fuel or that kind of thing. Those are the things that typically most households have. Then you get the hobby type stuff. So you may go socialising, you may go to the pub, you may go to watch the football, you may support your local team, you may go to the gym, you may be part of clubs, running clubs, cycling clubs, that kind of thing. The kids maybe they go to football, gymnastics, those kind of things. They're all kind of in there. Now, what's interesting, and it's a concept that people, unless you kind of visually see it, most people don't actually see any of this. So, if anything happens to your income, such as you're now no longer getting that, then which of these on the right can we get rid of? Well, let's highlight in red the ones we can't get rid of. Can't get rid of a mortgage. Can't get rid of that. You could get rid of the TV and the internet and mobile phones. So we'll make that green. You could. You could get rid of the car. Not going to be much fun. You can't get rid of loans or credit cards unless you've got a lump sum to pay them off. If you've got the car, you can't get rid of petrol, so that's kind of linked to that. You can get rid of the pub, football, gym, school, kids clubs, that kind of stuff, so kids activities. That could go. One thing I forgot to put in this list, food. Obviously you need to eat, and that's another one that you can't really do without. So if your income is now gone because you're unable to work, all of the fun stuff that you like doing and the kids like doing activities, you might enjoy going to the gym, that goes. You might like going to the football on a weekend with your friends, again, that goes. To go to the pub, that goes. You may get rid of the car, in which case then you have to walk or rely on public transport everywhere, so that could technically go. And you could get rid of the TV and the internet and the mobile phones, which means you're sat in a house with little or no entertainment and you can't really go anywhere because you don't have transport to do it. So what you're left with is the stuff that isn't particularly any fun. When you're ill, that's the last thing you want to be doing. Generally when people are ill, they tend to eat more because they're at home a lot. They tend to definitely want to watch TV and they spend a lot of time on the internet. If you haven't got private sick pay, then you won't be doing any of those. How does that sound? Now there is addition to this. So let me explain it to you like this. It's kind of like a traffic light scheme. Okay? And we all should know how traffic lights work. Okay. So let's say, for example, your income per month is... Oops, don't want to do that. £2,000 a month. Now, if you were unable to work and you lost %100% of that, how badly would your household be affected if you lost the full £2,000 each month? Think about all those things that you would have to get rid of. What would it be like if you got 50% of that, if you only had £1,000 to play with? Now, this one here, the red, may mean that you can't pay your mortgage and your bills, and you can't pay for your lifestyle things either. Amber might mean that you can actually pay your mortgage payment and your bills, but you can't afford to do anything else. Green means that you lose only £30 of your 2,000. How bad would that be? Not bad at all. Private sick pay generally costs less than that.